In this video, I'm going to discuss my dividend growth stock of the month for August 2021. Before I get started, would you help us out at this channel by clicking the thumb up button if you appreciate the content, subscribe to the channel, and ring the bell so that you get notifications of new videos when we post them. Thank you. Today I'm going to speak about Bristol-Myers Squibb, ticker symbol BMY, which is a giant pharmaceutical company that I'm pretty certain you've all heard about. This will be a fairly deep stock analysis, and I will go through the categories that I always go through when I do these analyses, starting with the dividend record for the stock. This slide shows some of the important dividend metrics that I look at for stocks. For BMY, which I'm going to call it BMY throughout the video because Bristol-Myers Squibb is too hard to say and I know I would screw it up, so I'm going to keep saying BMY, and that's what I mean. BMY yields 2.9% right now, which is a decent yield. I consider yields in the 2 to 4% range to be mid-yield stocks, and BMY is right in the middle of that at 2.9%. It has a 15-year streak of raising its dividend every year. That sounds pretty good, but on my way of scoring things, it's okay, because we now have stocks that are available to all of us that have streaks that go up beyond 60 years. And in that context, 15 years is a great start to what I'm sure we all hope, and that will become a much longer streak for BMY. The increase in their dividend at the beginning of 2021 was 8.9%, which was great, much higher than its 5-year dividend growth rate shown in the next line of that table, which has been 4% per year, which I would actually rate as slow for a mid-yield stock like BMY. The good news is that BMY's dividend growth rate has been accelerating over the last few years, and thus you see the disparity between the 4% per year averaged over the last 5 years versus the nearly 9% increase they gave at the beginning of 2021. And finally, the dividend safety score from Simply Safe Dividends is 79 over 100. It's their second highest category and means that BMY's dividend is safe and unlikely to be cut. I add all of those things up, interpret them with my own judgment, and I end up giving BMY a B for its dividend score. What would raise that score would be slightly higher yield and or continuation of that increased streak to bring it up maybe into the 20-year range, and most important, a continuation of the higher range of dividend growth rate. If they could keep it at in the 8, 9, 10% range for the next few years, that would raise, in my opinion, BMY's dividend grade to a B plus or an A. By the way, in doing these videos, I realize that I keep referring to Simply Safe's dividends safety score, and some of you may not be familiar with their range, so I'm showing it to you here. They score the safety of a dividend on a point scale that runs from 1 to 100, divided into 5 equal pieces. And so every 20 points, the grade goes up one, starting at 0 to 20. That would mean a very unsafe dividend with a high risk of being cut. And you can see it step up there from red to orange to very light green to moderate green to dark green. And you remember BMY's score is 79 out of 100. So that puts it in the second highest range there, which means it's safe and unlikely to be cut. Bristol-Myers Squibb is a giant pharmaceutical company. Its history dates all the way back to 1887. And in this slide, we can see how it is rated on various quality factors today. The indicators are listed down the left side. The rating that each source gives to each indicator is down the middle column, and the interpretation of that is in the right column. And once again, you can see all green colors running down the right column, which means that Bristol-Myers Squibb from various information providers is getting either the highest grade they give or the second highest category of grade that they give. Just looking at a couple, Morningstar's moat rating is wide. That is the highest moat rating that a company can have from Morningstar, and a wide moat indicates that they believe that Bristol-Myers Squibb, BMY, has sustainable competitive advantages that will be effective for up to 20 years or more. Going down, you can see that I get 2 quality indicators from value line. One is called their safety rank. They use a scale of 1 to 5 for that. They give it number 1, which is the highest rank they have. Another is called their financial strength grade. They use a different scale for that, and it starts with A++, which is the highest ranking they have for that particular metric. The last line above the overall quality grade for BMY is my own assessment of BMY's business model and execution, which is that it is a very good one, strong, sensible, and raises few questions in my mind about how does BMY make money. And on the bottom line, I put all that together into an overall grade, and not surprisingly, I give them a category of A. I deduct a little bit for the 2 goods rather than everything being the highest, and BMY ends up A-, still ends up being a dark green on business quality for BMY. BMY is a very, very excellent company. Let's take a look at a few financial graphs for BMY. And I promise to make this fast and painless. The first graph shows the company's total sales over the last 10 years. And you can see a nice curvature upward beginning in 2014 and running through 2019. And then a fast, big leap upward in 2020 and over the last 12 months, which now includes the first quarter of 2021. The reason for the big jump in 2020 is that in 2019 and then again in 2020, BMY made 2 significant acquisitions that broadened their product line and made them quite a bit larger company. Okay, this next slide shows earnings per share for BMY. And again, we see a similar curvature to the graph from the one we saw for revenue, which is to say a gentle increase every year starting in 2014 until a big jump in 2020 because of the acquisitions that BMY made in 2019 and 2020. And this chart includes an extra bar showing analyst predictions for the next 12 months, which covers 2021, and a significant jump in profitability, which is earnings, is predicted for the coming year. This next slide shows what happened to BMY's debt situation when it made those 2 large acquisitions. The line, the horizontal line across each of these graphs, shows a benchmark for suitability or safety of debt levels for a company. And you can see from both of them that BMY generally was not a debt-dependent company. Their debt ratios were, for the most part, well below those benchmark lines until the acquisitions were made. And at that point, in 2019, on both of these charts, you can see that BMY's debt level jumped way up. I'm not very alarmed by that. It stands to reason that they would help pay for the acquisitions using some debt. And in both cases, you can see that the next 12 months line bar suggests that BMY is beginning to bring their debt levels down. And they have, in fact, stated publicly in their last earnings call that they are going to pay attention to their debt level and try and bring it down. I said I would make this financial discussion fast and painless. And so this is the last slide I will show you with bar graphs on it. You can see from this graph that BMY also helped pay for its acquisitions by issuing new shares. So what we see in the slide is for about 8 years, BMY had a slight decline in the number of shares, which means they were buying shares back on the open market and retiring them. But that stopped. They went in the other direction in 2019 and then in a big way in 2020 with a big jump in share count. Again, that's quite understandable in light of the acquisitions. And while we see a slight drop in the first quarter of 2021 in the last bar, it's too soon to tell really, and I would not make an effort to predict whether we will see that BMY embarks on a slow and steady share retirement program going forward from here. This table shows what we have just talked about. The right-hand column shows my interpretation of the situation as to revenue, good. As to the reported earnings, excellent. BMY, even before the acquisitions, was making positive earnings every year, and they were growing steadily for several years. And with the acquisitions, of course, their earnings have jumped way up. The debt went up with the acquisitions, but historically BMY has not been a debt-dependent company, and I think in the future they probably won't be. So I give that an okay. And the share count trend, even though it jumped way up, which is the opposite direction you'd like to see it go, again, that's explained by the major acquisitions, and I give that an okay. Overall, I give BMY a financial grade of B. Okay, let's move on to talk about BMY's stock valuation. Valuation is different from the things we've been talking about. The first category is the dividend record, the company quality, and the financial record are all things within the company's control. What the company can't control is the price of its shares on the market. And in this valuation discussion, what I'm going to try to do is talk a little bit about fairness of the price that BMY shares are selling for right now. This graph shows two models that I use in valuing a company. I use a total of 4 models. This shows 2 of them. The magenta line is a fair value line, fair price line based on historical market behavior, and the blue line is a fair value line based on BMY's own historical market behavior. The black line running along towards the bottom of the graph is BMY's actual price. This is a graph that goes back to 2016. So it starts in 2016 and runs to where the red arrows are drawn, that is today. And we can see something very interesting to me. We already saw that BMY's revenue was going up since 2014. We saw their profits were going up since 2014. But look at BMY's price line. It's basically flat for the last 1, 2, 3, 4, 5, almost 6 years. BMY's been selling at a flat price. As I look at the graph myself, I can see that you can buy BMY today for the same price it was selling at in 2018, in 2017, and in parts of 2016. This seems like, what does this tell you? Here's what it tells me. It tells me that the market, for whatever reason, is not favoring BMY's shares by buying them and raising the price, even though BMY's been performing very well as a company over that time frame. And I consider that almost to be a gift from the market. BMY's price should have been more or less following its earnings growth, and it hasn't. And that means that BMY's earnings have grown steadily, as we've seen over the last several years. Its price has stayed the same. So somebody who bought BMY shares in, say, the middle of 2016 has actually lost money on the share price since they bought the shares. Someone who's waited until BMY is undervalued, like now, hasn't lost a dime in BMY. And that makes BMY undervalued right now, as I will explain in a little more detail. This table shows my 4 models. I'm not going to walk through all of them because they're tedious. The top 2 lines, Fast Graphs Basic and Fast Graphs Normalized, are the lines we were just looking at on the previous display. My interpretation of the 4 models is out to the right-hand column, and both of those first 2 models suggest that BMY is undervalued by quite a bit. The other 2 models that I use suggest that BMY is fairly priced right now. And when I add them up, shown across the bottom of this table, I come to the conclusion that BMY shares are about 10% undervalued right now. If we convert the valuation ratios to actual dollars, here's how I see it. The fair price for BMY shares is shown in the 3rd column on this table in yellow. Fair price is $77 a share, and at that price, BMY would be yielding 2.6%. If you go to the far left, I subtract 10% from that and get a discount price of $69 or less, at which point BMY would be yielding 2.9% or more. If you go to the far right, I've added 10% to the fair price, and that becomes the top of my fair value range. So my fair value range runs between 10% under my fair price, which is $69, to 10% over it, which is $85. I wouldn't pay more than $85 a share for BMY at the current time, even though it is such a high quality company. That's as far as I would go. Happily, as shown in the second column, BMY's current price doesn't make us have to consider how much we would pay because it's available right now at a discount. As I'm recording this video, I just looked up BMY's price. It's $68 and change, yielding 2.9% at that price. And my conclusion is that that's a very fair price and that this is a good time to purchase BMY. The setup that we saw in the previous chart, remember the price graph with the two the magenta and the blue lines, and then BMY's price going along flat, even though BMY has been performing very well. I see that pattern from time to time, and over the years it's turned into one of my favorite setups for buying a stock whose price has languished while the company itself has thrived. Often leads to a situation where you can buy a stock at an undervalued price, and sooner or later, it may not be next week, it may not be this year, but sooner or later the market will wake up to what it seemingly has been missing, namely that this is a high quality company making money every year and it's available at a bargain price. That's a great setup to buy a stock, in my opinion. Okay, this slide gives you my bottom line on BMY. It's a company in the healthcare sector, the pharmaceutical industry. The columns across show the four categories or areas that we talked about in talking about the stock, which are dividends, quality, financials, and valuation. And across, I show the grades that we've already seen when I talked about each of those individually. Dividends is a B, quality is an A minus, financials is a B, and the stock is 10% undervalued. Green straight across, BMY is a high quality company selling at an undervalued price. Beneath those grades, I've summarized just a few of the things that I talked about when I was talking about each category. I won't go through them again. I just draw your attention to the bottom right cell of this table where it says coiled spring ? As we just talked about the price graph, the fair price model 1, the fair price model 2, and then BMY's actual price running straight across being flat. That situation is sometimes referred to as a coiled spring. And what that means is as the company thrives and its earnings keep going up, but its price stays flat, it's almost like a spring being compressed. And the idea is that, and this happens often enough for it to have a name, is that the market wakes up at some point. It may not be this year, it may not be for a while, but the market wakes up to the fact that the performance of the company has been going up and its price hasn't been, and that releases the pressure. The market participants have their attention drawn to that fact. The price suddenly goes up, maybe for a while, faster than earnings. I've seen that phenomenon happen before with other stocks that I've bought and then held long enough for that to happen. And meanwhile, even if the price doesn't go up, you're collecting those dividends every quarter while you own the shares. And that brings us to the end of this video. Thank you very much for watching. I'll be back in about a week or so with a review of my dividend growth portfolio. For now, I'll just say goodbye, everybody.